Okay, if it's, so I'm in here, but it seems like I've lost everyone else. So I'm not too sure if they wanted to go or if they're having a problem getting back. Okay, here they come. Okay, so Joy, you're here. I don't know about Brenda yet, but we will continue on with this problem in scenario F. All right, so right now what I'm going to do is actually go through the computations. And so we have a couple of things we need to do. First of all, we need to round. And then we need to, for Maddie, because Maddie has a beginning capital balance and Maddie has a salary. So we're going to add those two together. Oops, sorry. Equals this plus, so we've got in the formula, it's going to be beginning capital plus the salary. And then we're going to then round it to 2 decimal places. Okay, so that's not quite right because I need to multiply this by the interest rate. Okay, so we have then the balance after the salary allocation, which is B2 plus B4, and then all of that multiplied by the rate of 5% and rounded to 2 decimal places. And so the interest that Maddie would receive would be $2,175. And then we can just drag and drop that across for the other partners. And then the total that would have been paid for interest or allocated for interest to the 3 partners is $76,029.50. And therefore, what's left to allocate? $76,370.50. So now the remainder, $76,370.50, and I want to tack that down and then multiply it by their profit and loss ratio, which in this case is 30% for Maddie, 45 for Dana, and 25 for Sophie. And I also want to put in a rounding function. So it will round it to 2 decimal places. Okay, and then I can just drag that across. and sum it all up. And now I've got an extra penny. So again, I'm looking at these two here. This is the largest one, so I'm going to subtract away that penny from the largest one so that, oops, no, what happened here? Let me see. Hold on just a second. That's right. Did I do something? I don't know. I'm suddenly seeing, so she said change round down for Dana. Okay, that's actually a good option. So say round down. All right, for Dana. But what I'm trying to see here is, why is this number not correct? Okay. That's the sum of that. And let's see here. I said F5 times 30%. Correct. F5 times 45%. Correct. F5 times 25. Let me just verify that this equals 100%. Yeah. So I'm not too sure. This is, I apologize. Oh, I know what I see. This is the problem right here. Okay, so there we go. So what I had was, for some reason, I was adding up the numbers that were in the other column. Okay, so E6 here is just the summation of the distribution of this $76,370 remainder. Okay. So now we're ready to do the subtotals, and all I'm going to do is just add up salary, interest, and distribution of the remainder that goes to Maddie. Then I'll do the same for Dana and Sophie. So in this particular scenario, then Maddie, well, let's see, Dana is going to get $36,759.22, and Sophie will get $22,154.63. And what's left for Maddie then is $45,086.15. And so now we are ready for our ending capital. Ending capital is beginning capital plus the amount that was allocated, this subtotal. And so at the end of the year, given these this particular partnership agreement, then these here are the ending capital balances for each of the partners. All right. I am willing to work through the ones that we haven't done yet. I know it's going to get a bit repetitious, but in each of them I have something slightly different. So let's take a look at scenario D. But I'm going to change one thing in scenario D, and that is to say that they made a loss. So this here really is a net loss. And when we have a net loss, it's going to be pretty much we're doing the same thing as we did before. The net income, there is a negative 104,000. Now, in this scenario, Maddie has no salary, but Dana has a salary allocation of 62,000 and Sophie has none. The interest, again, is on the beginning capital balances. So, first of all, let me do this step here. I'm going to get the total. And then now I'm going to see, well, what's the remaining to be allocated? And just notice that in this case here, since they lost money, this remaining gets to be even more and more negative. And then there'll be a negative remainder that will be allocated to each of the partners when we get down to the last step. All right, so the interest, and again, let me just note in here that the interest is for each partner. Okay. And the interest, it says it's on the beginning balance. So the beginning balance for Maddie was 23,500 and the interest rate was 5%. And then for Dana and Sophie, same calculations. And we'll do a sum total. All right, now how much is the remaining to be allocated? Well, 166,000 negative minus 6,629.50 means that there is a remainder to be allocated of 172,000. Okay, so how are we going to allocate this remainder? Well, the profit and loss ratio is 60, 10, and 30 for each of the partners respectively. So the remainder, which is this negative 172 plus thousand, we're going to, first of all, I want to tack that down using my dollar signs, and I want to multiply it by the profit and loss ratio for Maddie. In addition to that, I'm going to also do this rounding to the nearest penny. So I'm rounding now. Okay, here we go. And this very well can happen. It can sometimes happen such that there's so much of a loss that one partner or more may see their capital balance go down to a negative amount. And so if we add all of these together, the sum total is 102,402.70 negative. That's going to be charged to Maddie's capital balance. And I'll add that across. Yeah, well, I added the wrong thing here, but let me just drag this distribution of the remainder, because what's going to happen is every partner is going to be absorbing a piece of this loss. All right. And in this very unfortunate circumstance, now you've got two partners that have negative capital balances, and just one partner is still in the black. So in real life, how do you handle this? Well, there could be several different ways. If the partners are committed to the partnership, then what they may do is actually just stick it out for a while. Or they may have to contribute more into the company in order to bring their capital balances to something that's a little bit less negative. But anyway, I'm going to add all of the distributions up. These two match so that when I sum up everything that's been allocated, again, what we see is that this, from this total column here, matches the amount of net income. And since I have the net income on two places, oops, I want to, just a minute, insert a line with some arrows. But this time I'm going to go a little bit different because you'll see now that, okay. All right. The net income, net loss is exactly the same. All right. Now, I'm going to pause for a second and see if you have any questions on this allocation of partnership issues or on anything else, either from the homework or from the assigned readings for this week or past week, if you have something.
It's 20 hours.
Okay, I have not, let's see, which ones have I not done? Okay, so we haven't done B, but let me just kind of edit this because the interest rate in this one is a little bit different, and for completeness sake, I'm just going to add that Dana and Sophie have no income. This is for scenario B. We did see, so, and I'm going to post this file that has the completed works in Leo, so you can also download it from there. Let me see here. I'm highlighting these just so you remember that everybody gets this interest. And everybody gets the interest here. Okay. I'm going to take a quick look at the homework right now just to see if there is anything else that okay, homework week 6. I know you guys had some questions that were, what's the word I want to use? You know, you have to answer the questions with a short answer. And then there's some of them where you have to figure out how much is the income that's allocated. So a couple of things that maybe we ought to note regarding partnerships and how they differ from a corporation. So a partnership means that each partner can sign contracts and obligate the partnership as a whole on behalf of the other partners. This can be good, this can be bad, it just depends. So what happens is we call mutual agency. Mutual agency is, let's say, the three of us. So we've got Joy, Brenda, and myself. We are partners. I can then go and sign contracts on behalf of the partnership that would hold everybody would be responsible for. So this is why you have to be extremely careful who you get into a partnership with. And sometimes it's not a good idea to get into a partnership with families because, or good friends, because sometimes, you know, the partnership can take a huge toll on that relationship. So partnerships have what we call unlimited liability. And unlimited liability means that if the partnership goes belly up, the creditors, so the banks that have loaned the money, or it could be that the suppliers who have sold on account but haven't yet gotten paid, can come not only after the partnership assets, but they can come after the personal assets of the partners. So in this case, you know, it can be a bit risky. And so to avoid that, they are what we call LLCs, limited liability corporations. And a limited liability corporation then limits the liability of the partner to whatever he has invested in the business, but not to his personal assets. So in other words, that means that if the partnership goes belly up and but it is a limited liability partnership, then the creditors can come after the assets of the partnership, but they cannot come after the assets of the partners. But then there's also other rules as well. So then, let's say, for example, that a partner has a positive capital balance, but he's about to go declare bankruptcy personally. So his personal creditors can come after his personal assets, and they can even come after some or all of his partnership assets, just the way that this, how the law functions. Okay. I'm ready to, yes, well, your point is also true that, you know, in a divorce as well. So kind of when you have these events where you've got to be, you know, splitting assets and stuff, yes, it can be something of a challenge. And so you find some people out there, what do? They try and hide assets in order to, avoid the liability. As a matter of fact, many years ago, well, not many, but, back in the 1990s or something, a friend of the family, she was especially a friend of my mom, her husband had a car accident. When he had the car accident, uh, they had some real estate properties, and he went and put everything in his wife's name so that um, I guess the accident must have been his fault, and so the people that he had hit or caused injury to, he put all his assets in his wife's name so they couldn't get them. But then later on, it's a long story, but anyway, he divorced his wife, and he came back and said, "You need to sign over and give me this house." And my mother told me that, she said, "Kathy, God gave you that house. Don't you give him a thing." Anyway, I don't know how I got drifted off on that, but the truth is, yes, there are other situations as well where there can be really challenges. All right, so I'm going to call it quits for now. I'm going to process these videos and put them up, the links up onto Leo in the announcements area. And I hope you guys have a good weekend. Don't forget, so I have put this announcement onto Leo. Let me open it up here. Just bear with me a moment while I share with you this screen. Oops, just a second, sorry. Exit. Okay. All righty. Oops, not too sure what I'm sharing with you, but I don't think it's, here we go. Okay. So please be sure that you see this announcement here. All right. For your drafts, you should have 2 drafts, the written report and the PowerPoint presentation. So you need to post your draft by the 4th of July. I'm not saying do it on the 4th of July, but if you can get it done ahead of time, then you can enjoy your 4th of July, I hope. And you just need to go here, and if you click on there, I've actually linked it. You can just start a new thread where you're posting your draft. And then next is you need to give substantive feedback to at least 2 classmates. So take a look at what they've submitted, their PowerPoint and their Word documents, and give them feedback. So how this is going to be graded is by posting your own draft, you get 50 points out of 100. And then for giving substantive feedback to 2 of your classmates, each of those will count for 25%. So if you just post your draft there, but you don't give any feedback, you'll end up with 50 out of 100 points. And so that's by the 7th of July. And for the PowerPoint, it is due to be submitted by the 9th. And the report, which would be the Word document, by the 10th. I've said here you can submit as late as 8 a.m. on the 11th because I'm not going to be sitting up till midnight trying to, waiting for people to submit them and start grading them. Let me go back. I want to go to the discussions area and just point out one more thing, because here, alrighty. This is the discussion topic and the information. And I want to just highlight for the requirements. especially number 3. All right, so you want to comment on whether it meets the requirements. So 2 to 3 pages with this, single space, 1-inch margins, double space between paragraphs, no more than 3 pages. If you're going to add some tables and exhibits, please do them kind of like attachments at the very end. You can reference in your paper, but the written part needs to be no more than 3 pages. You will have also a cover page or title page, and that's not included in the 3 pages. But we have here the topics that we've covered from weeks 1 through 5. So for your company that you need. So do a brief introduction of your company. You can tell us a little bit about it. And some of that information that you have about it, you've already done. So you can say that the company is headquartered in this place. The company began business in certain year. And also, you have what other information? You know who the CEO and the CFO are. So that stuff you can include there. All right, you're going to report on the topics that we've covered. And please note that you should be using headers in there. These are just an example. Don't think that this is comprehensive, because in this bullet point here, it says use headings such as accounts receivable, inventory, the balance sheet, the income statement, profitability, but don't limit it to that, because there's also property, plant, and equipment, etc. So this is just to kind of give you, really, the emphasis here is to use headings. And then you also have your reference list with your citations, and that's repetitive there. So that's what we're looking for in terms of technical stuff. But of course, make sure that they've covered the topics. Sometimes people are submitting partial drafts, so that is to say that it's started, but they haven't yet completed it, and that's fine too. But just note that they need to cover the topics that we've gone over in weeks 1 through 5. And then your PowerPoint, some similar things, but please note, 8 slides total, no more than 10 words per slide. So use graphics, use charts, use photos, and use them judiciously. Don't just fill up every space on the slide with 1,000 pictures. Another point I want to bring to your attention, because a lot of times the data in the balance sheet or the income statement reads, the earliest year is on the left side. The most recent years, like 2019, 18, 17. And what we need to read is turn them the exact opposite, so that it's 17, 18, 19. And the reason I'm saying this is because if you're making charts from the data, you want to make sure that that chart reads the earlier years in the left and the most recent on the right. Otherwise, it could possibly be that profitability is increasing, but the way the chart looks, it looks like it's decreasing. All right. And please note, it would be as if you're making a presentation. So don't put every word on the slide. Don't put more than 10 words on the slide, but rather any explanations, any discussion, what would you say to your audience? That should all be in the notes area for each slide. And then on the last slide, be sure that you include your references. When I say not on the last slide, in the notes area. Also, there needs to be a conclusion, but that's already stated up here. So what other topic? We've talked about the auditor's report. We have talked about who is the auditor or the public independent registered public accountant. let's see, done inventories, we've done profitability. There's been some ratios here and there. So don't forget that to make your story, because what you want to do is share about your company. Not only well, let me put it this way. Let me not say the not part. Let me just share about your company as if you're trying to convince someone that this is a good company and they can invest in it. I mean, maybe you might come to the opposite conclusion, and you might just say that right now it's not a good time to invest in this company because they're having not making up a profit, or they're having maybe other issues that would make it not advisable. All right, so please note, remember, post your drafts, your draft report and your draft PowerPoint by the 4th of July. That gives you 5th, 6th, and 7th to give feedback to at least 2 classmates and hopefully receive some feedback on your own drafts. And then the 9th and the 10th is when these are due. All right, any other questions or comments? Well, if not, I'm going to say have a wonderful weekend. And I know it's going to be busy because I know you guys are working on stuff. But we're getting down to 6, 7, and 8. So the end will be here before we know it. All right, have a wonderful weekend. I'm closing the meeting out, and I will see you in class then again soon. All right, bye.